A frequently discussed setup is the squeeze, which occurs in situations of low volatility. One may apply the squeeze indicator to identify situations when the market is building up momentum for its next major move higher or lower. Two well-known squeeze setups are Bollinger on Bollinger Bands, or by John Bollinger and John F. Carter's version described in Mastering the Trade and Quant. In the following, we'll first explain what distinguishes the two setups, and then look at how our squeeze momentum indicator applies the concepts. The Bollinger squeeze. Briefly, the Bollinger Bands display standard deviation levels above and below a moving average. The bands widen during periods of high volatility and narrow during less volatile periods. A squeeze occurs when the Bollinger bandwidth, i.e. standard deviation, reaches a minimum for a 120-bar lookback period. This is what's referred to as a Bollinger Band squeeze. Link goes to our squeeze indicator that displays setups on a separate panel. Bollinger furthermore suggested different approaches for identifying the direction of breakouts, for example using the Relative Strength Index, RSI, together with a volume-based indicator. The Bollinger-Keltner squeeze. Carter's approach compares the Bollinger Bands with the Keltner channel. If the Bollinger Bands narrow in width, moving inside the Keltner channel, it constitutes a Carter squeeze setup. Carter basically compares true range volatility with directional volatility. Therefore, it is not necessarily a low volatility scenario, but a situation that occurs in consolidating or sideways markets. Breakouts from Carter's TTM squeeze indicator occur when the Bollinger Bands move back outside the Keltner channel. Carter then validates these setups by using a 13-bar momentum period. Lizard indicator's squeeze indicator. Our squeeze indicator identifies one of the following scenarios. For the Bollinger squeeze, we want low volatility, but not minimum, when compared to the 120-bar lookback period. By default, the threshold is set to 1.2. By increasing this value, the low volatility definition will become more stringent, effectively delivering fewer low volatility setups. All of the above squeeze indicator breakouts must be aligned by two momentum periods, 10 and 25 bars. Also, in order to eliminate distortions from the lookback period and reduce noise signals, the balanced momentum calculation is used. Finally, the squeeze indicator breakouts have to be confirmed by price action, i.e. thrust bars. For long signals, the signal bar has to close above the high of the previous bar. For short signals, the signal bar has to close below the low of the previous bar. Squeeze indicator filters. Our squeeze indicators also come with the following options to filter signals. Additionally, Bollinger Squeeze Basic offers an interesting volatility measure built into the main histogram. The range of blue and red squares on the zero line indicate the current relationship between the Bollinger Bands and the Keltner channel. The main idea behind this indicator is to establish trading ranges during the non-trending phase of the market, blue squares, to enter on a breakout and a switch to red squares, trending phase. The histogram will suggest how strong the current trend is and will tell you when to exit a trade on the trend's weakening. The KTBB squeeze indicator measures market volatility and momentum to help decide which direction to trade. It measures the squeeze in volatility by deducing the relationship between the upper and lower bands of Bollinger Bands and Keltner channels. Reading the squeeze indicator, the red and green dots along the zero line indicate if there is a squeeze. A red dot means there is a squeeze condition in effect. A green dot means that we are not currently in a squeeze. The first green dot after one or more red dots is where the squeeze is said to have fired in quad. The histogram indicates momentum. If the histogram is rising, increasing, the histogram will be yellow or cyan, light blue. If momentum is decreasing, the histogram will be red or dark blue. What is it made of? The squeeze indicator is a combination of. During periods of low volatility, Bollinger Bands narrow and trade inside Keltner channels. They can only contract so much before it can't contain the energy it's been building. When the Bollinger Bands come back out, it explodes higher. How can you use it? 1. To time directional moves. 2. To stay out of premium selling plays when you believe a big directional move is going to happen. Target. The price target for the squeeze is usually the 1.272 extension of the swing going into the squeeze.